What if just one simple investing mistake could cost you thousands of dollars over time? The truth is, most beginner investors don't lose money because they're unlucky, they lose it because they make avoidable mistakes. In this video, we'll reveal the 10 biggest investing mistakes beginners make and how to avoid them. Many beginners invest without having a clear strategy. Buying stocks just because someone recommended them is not a smart investment strategy. Before investing, define your financial goals and create a long-term plan. Many new investors dream of getting rich overnight. That mindset often leads to risky decisions. Successful investing is about patience and consistency, not quick profits. Putting all your money into a single stock is extremely risky. Diversifying your investments helps reduce risk and protects your portfolio over the long run. Fear and greed are the biggest enemies of investors. Smart investors stay calm during market ups and downs and stick to their investment plan. Investment fees may seem small, but over time they can reduce your returns. Always understand the fees before investing your money. Trying to perfectly time the market rarely works. Investing consistently over time is usually a much better strategy. Never invest just because something is trending online. Research the company, understand the business, and make informed decisions. Don't invest money you'll need in the near future. The market can be unpredictable, so only invest money you can leave untouched for the long term. Don't blindly follow the crowd. Make investment decisions based on your own goals, research, and long-term strategy. Mistake number 10. Every investor experiences losses. Learn from your mistakes, stay patient, and remember that investing is a marathon, not a sprint. Those are the 10 biggest investing mistakes beginners make.